What's going on, everybody? It's Jeff here. Welcome back to the channel. I hope all of you guys had an amazing weekend. Today we are up 20% as I am looking at the charts. For all of you guys that watched my video yesterday, took a second to calm down, take a deep breath. There was a lot of emotions after last Thursday and Friday, and you stayed strong with this. Shout out to you guys because it is already looking on the bright side, especially since the divergence channel that we were gearing towards and that bull flag has began to broke out. Shout out to my buddy Cameron, who is a absolute savage when it comes to reading the charts, really called out everything that was going to happen this morning. I'm sure you're watching this, so shout out to you, Cam, bro. But guys, in this video, I want to really talk about what is set to happen as long as we can continue to maintain this price going forward. It is looking very bright for us. So stick around, guys. You're not going to want to miss this. For those of you that are new to the channel, all I ask that you hit that like button and subscribe to join the family. Let's get rocking. First off, quick peek at the charts. As you can see right here, this bull flag that was starting to form, you can see it bounced off 1, 2, 3, 4, broke through, kind of came back a little bit, came back again, was really starting to kind of narrow in that channel, especially after hours, broke through with all the news that happened this weekend, which was much needed because, like I said, guys, Thursday and Friday, the emotions were high, the tensions was high. The media spreading the fear was at an all-time high, and we broke out right through that. We are still bouncing off that $57 to $58 level of resistance that we hit a few times, and it is channeling. All right, as you can see, once it poked through early this morning, it kind of came back, but we barely retraced back down to 55 and look to break through that again. If we break through that again, expect another runner up over $60. So like I said, guys, it's only Monday. Expect Monday, Tuesday, Wednesday, in my opinion, to be good because of all the options interest and action that is happening. Now, if you've been following my channel for a long period of time, you know I am a beast when it comes to the options and really understanding the options data, and that's exactly what I want to talk about even more of today. So first off, guys, I was taking a peek over at bar chart and noticed we are still #1 with the options volume. One thing that you guys might notice is a little bit of difference. It's a 60-40% call to put ratio. Normally we were seeing about a 75% to 25% ratio, but still the options volume is still #1, outpacing Apple. Apple always has a high options volume, one, because the float, the interest is just naturally just there. And then also because the implied volatility is so low, it's very advantageous and cheap to basically buy Apple call options. One thing I was worried about, okay, that I talked to you guys is about the premium price rising. I thought maybe that would deter some action on the options volume, and as you can see, guys, clearly it hasn't. So let's get into what I want to talk about when it comes to the options volume. First of all, there's a little bit of I think misconception about what is going on when it comes to buying options. Do the market makers buy the stock right away in order to hedge their positions? How that kind of works. So first off, guys, let me just say this right now. Currently, AMC has a total open interest, okay, which the amount of open contracts is 4.67 million. That includes calls and puts, okay? So let me just explain to you guys really quickly how it works. Options market makers try to avoid risk as much as possible. One way they hedge is to look at the delta of a call option just purchased and sell an appropriate amount of stock to hedge. Sell an appropriate amount of a stock. Conversely, if they sell a call, which means as you buy a call, the market makers will hedge with that, with a long stock position. And a lot of people will say, oh, all right, well, as soon as you buy a call, the market maker hedges for that position. And there's a little bit of misunderstanding there because I'm going to explain to you why. If AMC is currently trading at $10 like it was, and I bought a $40 call option, okay, that is set to expire in June of 2022 or January of 2022 or January of 2023, that far out. And because it's only at $10 and I literally have to go 300% to become in the money, the market maker, most market makers will not hedge for their positions because one, the time frame gives them an insanely long amount of time, and there's so much running that has to do. That's why when you hear other people on the internet and myself talking about the little bit of difference, not a huge, but that little bit of difference when more options become in the money, the more buying pressure that adds to it. Well, also, guys, as you're seeing here, like I said, if the market maker sells a call, which means us as the retail investor or institutional investors buy a call, they hedge with a long stock position. One thing that I was worried about AMC slowing down was, like I just said, guys, the fact that the premiums were going to become so high. If you look at this June 18th, all right, the $70 call option, which we're still about what, 12 bucks away from, is going for 15.50. The implied volatility is absolutely insane. I was worried that those options were not going to be scooped up, and clearly I was wrong, because people are continuing to add buy options like an absolute beast. So what is most likely set to happen because of this? Okay, well, let me explain. We've talked about the gamma squeeze before, and how a gamma squeeze happens is because there is a numerous amount of call volume happening and a numerous amount of buying pressure in order for the market makers to hedge their position, as well as the compounding effect of more and more options becoming in the money. Now, I've showed you in other videos, I'm not going to jump back into it. That June 18th is an absolutely insane amount of call options that are already in the money, as they were when I looked at my last video when the price was just at 50 bucks, let alone where it's going to be at 60. And remember, the highest strike price available, okay, for individuals that bought that June 18th, which was already a massive day before, just a little bit over about a week ago, was $73. So if we can get to that $73 mark, that's when the insane amount of gamma, right, buying pressure in order for the market makers to stay delta neutral is going to occur. Now, people are talking about the short interest decreasing a little bit. First of all, guys, anything in double digits is more than AMC was 6, 7, 8 months ago. So there is still a lot of short interest, and wait until that compounding effect, all right, of people buying, the day traders jumping in, options becoming in the money, okay, market makers having to buy more stock to be able to hedge their positions. There is still a positive call to put ratio, which means more individuals are buying calls than buying puts. And then to compound that with the fact of shorts having to cover their positions, it's just a freaking compounding effect that is set to absolutely blow this thing up. One thing, guys, I'm going to jump up really last before we close this video, guys, is this right here. We were able to consolidate around this $50 mark. If you've been watching me for a long time, which I know a lot of you guys have, that consolidation is key in order to find where we're going to drop down to next. All right, now we talked about this numerous times when the price was at that $12, $14 range, and saying I'm looking for consolidation. I don't need to break out to 16, 17. I'm looking for that new consolidation, that new level of support, so we don't drop all the way back down to that $9 level we visited so often. This is a great sign for us, guys. So that is going to wrap it up for this video. I hope all of you guys got some rest. You were able to gather some strength, rally together, and keep this stock going strong. I am going to be monitoring it very closely for all of you guys that watch this before the last couple hours of the day, and see if we get that massive break above that 58.50 level of resistance and blast through 60 bucks. So guys, that's it for this video. I'll continue to update you. I also I'm going to post my Twitter handle in the description below. I know a lot of you are following me. I'm going to become much more active on it. So that's it for this video, guys. I'll see you in the next one.